This episode was produced using AI-generated voices and scripting. Okay, so here's what I keep thinking about. Everyone's talking about Anthropic like it's this plucky safety-first startup that's gonna keep the big guys honest. And meanwhile, they just signed what might be the largest chip deal in AI history with Google. Soren, at what point do we stop calling this an independent company?
That's the question nobody wants to sit with, because the answer is uncomfortable. Look, 30 billion in annualized revenue is staggering. That number is real, but the thing that should make you pause isn't the revenue line, it's the infrastructure line beneath it.
Break that down for me.
Anthropic just locked in a multi-hundred billion dollar deal for TPUs, Google's custom chips, built by Broadcom, designed by Google, running Google's data centers. This isn't like buying servers off a shelf. You're buying into an entire ecosystem. Your models get optimized for that silicon, your engineering team builds around those APIs, your scaling assumptions are all tied to Google's roadmap.
So you're saying they're not a customer, they're what? A tenant?
Closer to a tenant than people want to admit. And here's my first contrarian take that's going to annoy people. This deal doesn't show Anthropic's strength. It shows their vulnerability. A company with real infrastructure independence doesn't need to make a deal this big with a single provider.
Okay, but couldn't you flip that? Couldn't you say Google needs Anthropic just as much? Like, Google Cloud needs a marquee AI customer to compete with Azure and AWS.
Sure, and that's the narrative Anthropic would prefer you believe. But think about the asymmetry for a second. If Anthropic walks away from Google, hypothetically, they have to rebuild their entire compute stack. That's years of work. If Google loses Anthropic as a customer, they lose revenue, which hurts, but their TPU roadmap continues. Their own Gemini models keep running. The dependency is not symmetric. It's dramatically lopsided.
That's the part nobody talks about.
And I want listeners to really sit with this. When you hear multi-hundred billion dollar deal, your brain processes that as power, as leverage. But in infrastructure economics, the buyer of that much custom silicon from a single vendor isn't the one with leverage. The seller is.
So wait, are you saying Anthropic made a bad deal?
No. I'm saying they made the only deal available to them at the scale they need, and that's a very different thing than a good deal. They need compute at a volume that basically only 3 companies on Earth can provide. Microsoft is taken. They're all in on OpenAI. Amazon has their own custom chips, and they've invested in Anthropic too, but AWS runs on Trainium and Inferentia, which is a whole different architecture. So Google was the partner that could deliver TPU scale immediately.
Right, and Anthropic already had Google as an investor. Google put in, what, 2 billion?
Over 2 billion, with commitments potentially up to 4. And Amazon's in for up to 4 billion separately. So Anthropic has this fascinating and kind of precarious position where its 2 largest investors are also its 2 largest cloud competitors to each other.
That sounds like a sitcom where two exes both show up to the same dinner party. How does that even work operationally?
Carefully, very carefully. And I think it works until it doesn't. Right now, both Google and Amazon benefit from having Anthropic's models available on their cloud platforms. It drives enterprise customers to both GCP and AWS. But the TPU deal changes the calculus because it tilts the infrastructure dependency hard toward Google.
Does Amazon care about that?
Amazon should care enormously about that, and I bet internally they do. Because here's what the TPU deal really means at a systems level. When you optimize your models deeply for one chip architecture, your performance on other architectures degrades relatively. Not absolutely. Claude will still run on AWS, but the best version, the fastest version, the most efficient version will be on Google's infrastructure.
Okay, so here's where I want to push back on you. Because I think there's a version of this where Anthropic is actually being really smart. They're playing both sides. They get Google's chips, Amazon's money, and they maintain this brand as the responsible AI company that's not beholden to any single tech giant. Isn't that the game?
That's the story Anthropic tells, and it works great in a pitch deck. The structural dependencies don't care about branding. Here's an analogy. Samsung makes chips for Apple. Apple designs the chips, Samsung manufactures them. For years, people said Apple was dependent on Samsung's fabs. What did Apple do? They diversified to TSMC the moment they could because they understood that depending on a competitor for your most critical input is an existential risk.
So where's Anthropic's TSMC?
It doesn't exist yet. That's the problem. There is no neutral, scaled-up TPU alternative. NVIDIA GPUs are the closest thing to a Switzerland in the chip world, and even those are supply constrained and getting more expensive. Anthropic doesn't have the capital to build their own fabs. They don't have the engineering team to design custom silicon from scratch, so they're locked in. And the lock-in just got 100 times deeper with this deal.
Let me throw something at you. 30 billion in annualized revenue. That's not nothing. That's approaching the scale where you could, in theory, start building your own infrastructure, right?
In theory, sure, but annualized revenue isn't profit. We don't know Anthropic's margins. We don't know their burn rate. What we do know is that training frontier models cost billions per run, and that inference at scale, actually serving Claude to all those enterprise customers generating that revenue, eats compute like nothing else. I would be shocked if Anthropic is profitable right now in any traditional sense.
So the 30 billion number is a vanity metric?
It's not vanity, it's real demand, but it's a top-line number being used to distract from the structural story. And here's my second contrarian take. The revenue growth actually makes the Google dependency worse, not better, because the more revenue you generate, the more inference compute you need. The more inference compute you need on TPUs, the deeper you're in. Growth tightens the handcuffs.
Come on, that's... Okay, I actually think that's a really good point. Growth as a trap rather than an escape route.
And I want people listening to apply this lens more broadly, not just Anthropic. Every AI company that doesn't own its own compute is in some version of this situation. The entire AI boom is built on rented infrastructure. OpenAI rents from Microsoft. Anthropic rents from Google and Amazon. The only companies that truly own their stack end-to-end are the hyperscalers themselves. Google, Microsoft, Meta, Amazon. Everyone else is a tenant.
So you're saying the real winners of the AI boom are the landlords?
I'm saying the real winners of every boom are the people who own the picks and shovels. This has been true since the California gold rush, and it's true now. The difference is that in AI, the picks and shovels cost hundreds of billions of dollars, and only 5 companies on the planet can make them.
Let's talk about Broadcom for a second, because they're in this deal too, and everyone's kind of glossing over them. What's their angle?
Broadcom is fascinating here. They're the company that actually manufactures Google's TPU designs. Google designs the chip architecture. Broadcom handles the physical implementation and production. So in a sense, Broadcom is the arms dealer selling to both sides of every conflict. They make custom silicon for Google. They make networking chips that go into everyone's data centers, and their stock has gone absolutely vertical because of deals exactly like this.
So Broadcom's the one entity in this whole story that has no downside risk?
Lowest risk, highest margin. They get paid whether Anthropic succeeds or fails. They get paid whether Google's TPUs win or NVIDIA's GPUs win, because they make components for both ecosystems. If you want to know who's really winning the AI infrastructure game, look at Broadcom, look at TSMC, look at the companies that are upstream of the competition rather than in it.
Alright, I want to zoom out, because there's a bigger question here about Anthropic's mission. This is a company that was founded explicitly because the founders, Dario and Daniela Amode, left OpenAI over safety concerns. Their whole pitch is, we're the responsible ones. Does being structurally dependent on Google undermine that?
This is where it gets really interesting and a little uncomfortable. Anthropic has a unique corporate structure. It's a public benefit corporation. They've built in governance mechanisms specifically designed to prevent the profit motive from overriding safety considerations. But governance structures only work when you have the power to enforce them.
Meaning?
Meaning, if Google controls your compute, Google has implicit veto power over your research direction. Not explicit. They're not going to call up Dario and say, don't publish that safety paper. But if Anthropic wanted to, say, slow down a capability advancement because of safety concerns, and Google wanted that advancement to ship on GCP to compete with Azure OpenAI, who wins that argument?
You think Google would actually exert that kind of pressure?
I think they wouldn't have to. The pressure is ambient. When your entire operation depends on a partner's goodwill and continued investment, you develop an instinct to not make decisions that would upset that partner. It's not corruption, it's just physics, incentive physics.
That's dark.
It's realistic, and I want to be clear. I'm not saying Anthropic has compromised its safety mission. I'm saying the structural conditions now exist for that compromise to happen gradually. invisibly in ways that even the people inside might not recognize. That's how institutional capture works. It's never a dramatic betrayal. It's 1,000 small accommodations.
Okay, I need to push back here because I think you might be overcorrecting. We do this thing where anytime a company takes investment or signs a deal, we assume they've been captured. But Anthropic has been pretty aggressive about publishing safety research, about their constitutional AI approach, about responsible scaling policies. Doesn't the track record count for something?
The track record counts. I'll give you that. But track records are backward looking and dependencies are forward looking. Everything I'm describing becomes more relevant as the stakes get higher. When you're a small research lab, nobody cares what you publish. When you're a $30 billion a year company sitting on top of Google's infrastructure, every decision has geopolitical and competitive implications.
Fair enough. Let me ask you something from a totally different angle. What does this deal tell us about the AI market structure that's forming? Because it feels like we're watching real-time consolidation.
We're watching the formation of what I'd call AI karatsu, these tightly bound constellations of companies that are nominally independent but functionally integrated. Microsoft OpenAI is one. Google Anthropic is becoming another. Amazon's trying to build a third with Anthropic and their own efforts. Meta's the weird one doing it all internally.
Wait, seriously? You think we're heading toward like Japanese-style industrial groups?
The structural parallels are actually striking. In the original Karatsu, you had a main bank, a trading company, and a bunch of manufacturers all cross-holding equity and doing preferential deals with each other. Replace main bank with cloud provider, replace trading company with chip designer, and replace manufacturer with AI model company, and you've got exactly what's forming right now.
And Karatsu were eventually seen as a problem, right? Because they stifled competition?
Exactly. They were efficient within the group, but they made it nearly impossible for outsiders to compete. That's the AI market we're building. If you're a startup trying to compete with Claude or GPT-4, you don't just need a better algorithm. You need hundreds of billions of dollars in compute access, which means you need a hyperscaler patron, which means you're inside one of these groups or you're dead.
So the era of the independent AI startup is over?
At the frontier level, at the level of competing with Anthropic and OpenAI on general purpose models, yeah. I think it's been over for about 18 months and people are just now catching up to that reality. The compute requirements are simply too large for any entity that isn't either a hyperscaler or backed by one.
And nobody's going to say that out loud
Because every VC with an AI portfolio needs you to believe otherwise. Sorry, that was probably too honest.
no, that's what we're here for. Okay, let me throw one more thing at you. The regulatory angle, the FTC, the EU, they've been sniffing around these big AI deals. Does this TPU arrangement draw scrutiny?
It should, but it's structured in a way that makes it hard to challenge. It's a commercial procurement deal, not a merger. Anthropic is buying compute from Google. That's just a customer-vendor relationship on paper. The fact that Google also owns equity in Anthropic, and the fact that this deal creates structural dependency. Regulators haven't really developed the frameworks to address that kind of soft control.
Because it doesn't look like a monopoly play.
Right. Traditional antitrust looks for horizontal consolidation, one company buying its competitors, or vertical integration, one company buying its suppliers. This is something new. It's diagonal if you want to call it that. It's a combination of equity investment, commercial dependency, and ecosystem lock-in that achieves many of the effects of a merger without any of the legal triggers.
Diagonal integration. I like that. Stealing it.
Go ahead. And I think this is actually the most important policy question in AI right now. Not will AI take our jobs or will AI become sentient? It's are we allowing a market structure to form that makes meaningful competition impossible at the infrastructure layer? Because if the answer is yes, then it doesn't matter how good your safety governance is. The companies that control compute control AI.
So where does this leave Anthropic specifically? Like, best case, worst case. Paint both pictures.
Best case, Anthropic continues to grow revenue. The safety mission holds, and they gradually build enough financial muscle to diversify their compute sources. Maybe they start using more NVIDIA GPUs. Maybe they design some of their own inference hardware. Over 10 years, they reduce the Google dependency to something manageable. They become the safety-conscious alternative that keeps the whole industry honest.
And worst case?
Worst case, the dependency deepens exactly as I described. Google's interests and Anthropic's interests start to quietly diverge. Anthropic can't make moves that would upset its primary compute provider, so it slowly becomes a premium AI division of Google Cloud in everything but name. The safety mission gets diluted not through any dramatic betrayal, but through the accumulated weight of commercial necessity, and the public benefit corporation structure becomes a legal artifact that looks good in press releases but doesn't actually constrain anything.
That's bleak.
The realistic outcome is probably somewhere in between. But I think people need to stop treating Anthropic as this pure counterweight to the big tech AI push. They're funded by big tech. They run on big tech infrastructure. They sell through big tech cloud platforms. They are part of big tech's AI ecosystem, and this TPU deal makes that more true than it's ever been.
All right, last question, and I want you to be direct with the listener here. What should people take away from this?
Here's what I'd say directly to you listening. Next time you see a headline about an AI company's incredible revenue growth or their massive new deal, ask one question. Who owns the compute? Not who built the model. Not who has the best benchmark scores. Who owns the physical infrastructure that everything runs on? Because that's where the real power is. And right now, that power is concentrating in 3 or 4 companies faster than at any point in the history of technology.
And 30 billion in revenue doesn't change that equation.
30 billion in revenue is impressive, genuinely. But revenue is what flows through you. Infrastructure is what you stand on. And Anthropic is standing on Google's floor. That's not a criticism. It might be the only option available. But let's stop pretending it's independence.
All right, follow the compute, not the revenue. That's the show. Thanks for listening, everybody.
Thanks, everyone.